We have talked about the inherent risk as well as internal controls regarding cash. Now let us give examples and definition regarding different kinds of concealments of cash shortages. The first one is lapping. Lapping happens when the collection of receivable from one customer is misappropriated and concealed by the next collection from another customer. That's why it's called overlapping. Let's have an example. On January 15, Bo collects 60,000 from Philip and proceeds to steal it. So this collection was not recorded. Okay? But then on January 25, Bong collects 80,000 from Laika. Bong records the transaction as a collection to Philip instead of Laika. So Laika's collection overlapped Philip's account. So Bong will record debit to cash and then credit to accounts receivable Philip. And then the next collection will then be overlapped with Laika, so on and so forth until there is a missing amount which stems from January 15 transaction, right? So this happens when there is lack of segregation of duties. In our particular example, Bong is authorized to receive collections as well as record them, or in this case, not record them, right? So there must be proper segregation of duties to avoid this problem. Now, how can this be discovered? This can be discovered when we send out external confirmation, which is a letter to our customer. It can be for Laika or Philip, and then confirm whether their particular account balance in our books matches the actual balance. We are expecting a reply from our customer, and then now Laika will expose Bob and say that I already paid my whole account on January 25. So that's the way to discover lapping. Our second concealment is kiting. Kiting is made possible by exploiting what we call the float period. The float period is the time it takes for the check to be cleared and credited to the company's account. There are three essential steps for kiting. First, a check is written at month end to transfer funds from one bank to another bank account where the misappropriation was made. Step number 2, the fraudster would include the check as a deposit to the account where he misappropriated the money. Take note that a deposit will be reflected in that particular bank. However, in step 3, because of the float period, the drawn check on the first bank account will not be reported in the month-end bank statement. The overstatement of cash conceals the shortage. So this means that on one bank account, a check is drawn, but because of the floating period, it will not deduct its amount until the next period. It will be deposited to another company account. Deposits will be cleared before check drawn was cleared. So there will be a plus in the other bank account, while in the current period, there will no be minus in this first account. It will only be reflected in the next period. That's how the cash shortage is concealed through kiting. Let's have an example. On December 25, employee draws a check from BDO account and embezzled it. Take note that on December 25, on Christmas Day, there was no journal entry made for the check. On December 27, employee encashes check and keeps it for himself. Again, there's no journal entry here. On December 31, employee then draws another check, this time from Union Bank, and deposits it to the BDO account. So the BDO account will reflect the deposit. However, the Union Bank account does not reflect the withdrawal until the next period. Therefore, as if there was no difference between the total cash balance. Next period, the employee will prepare the bank reconciliation, but it will not account for the outstanding check by the Union Bank. How do we solve this problem? How do we detect kiting? First one is bank transfer schedule because it shows the disbursement and deposit date for 2 or more particular bank accounts. So it's very essential because we will see and compare how we recorded it in our journal entries as compared to when the bank really processed the transactions. Another one is cut-off bank statement. We can request a particular bank statement from the bank up to a particular date, and this will be ensured which checks should be included, credited in terms of the bank statement, and which checks should be in the next period. The last example is window dressing. It is not really limited towards concealing cash, but it can be applicable. It occurs when books are not closed at year-end and revenues that are supposed to be in the next period are recognized in this period, and expenses which should be recognized this period are recognized next period. We are advancing our revenues and we are delaying our expenses. This means that sales will be overstated and expenses will be understated. And it's as if we are dressing up our financial statement to be better than it actually is. I remember this meme.
Damn, you looking real cute. What's your name?
Thanks. My name is Felix.
Oh shit. I'm killing myself.
Let's have a comprehensive example this time. about different kinds of shortages, how they conceal them, and how can we discover them. The following are transactions in Nelson and Murdoch law firm on the last few days of December. So these are the transactions that actually happened. This is our basis, right? So it is, as accountants, it's our job to ensure whether these transactions are indeed recorded in our journal entries and are indeed reflected in our bank accounts. Let's see. On December 26, we received check from Wilson on December 26 for 20,000 for sales that happened last month. Okay, so we will debit cash, credit accounts receivable. And then, employee wrote a check against the company's Metro Bank account on December 27 for 30,000. So, this is probably, or this can be, a bank transfer to our BDO account. Let's see. And then on November 28, we receive a check from Nobu for 45,000 worth of sales that happened last month. So again, another credit to accounts receivable and debit cash. We receive a check also from Stick on December 30 for 60,000 for sales this year or this period. And then employee wrote a check against BDO's account on December 31 for 40,000. And lastly, we received check from Karen on January 2 for 40,000. Now let's be clear here to make it obvious because it's such a long problem. Let us mark which transactions are deposits and which transactions are disbursements. So the blue ones are deposits and the yellow ones are disbursements. Take note that the last transaction is not included in our current year because this receipt have been received on January 2. Therefore, this is a collection next year. When we inspect our books, we should not include our receipt from Karen. So here are the journal entries. Okay? The first thing that we noticed here was that there was no entry on December 26 when we received the check from Wilson. Instead, we only recorded it on December 28, right? So, why is it that we did not record it on December 26? Another issue rises up when we inspect the collected amount due from Nobu. In our basis, what actually happened was there was a collected amount due from Nobu on December 28 amounting to 45,000. But in this particular journal entries, only 25,000 was collected on December 28. And the other 20,000 was collected at a later date on December 30. It seems that in our journal entries, there is a possibility that the collection of Wilson is misappropriated because there is a delay in entry. And then on the date that we have collected Nobu, it was applied first to Wilson and it was partially applied to Nobu on December 28. And on December 30, we collected another account from Stick, right? And then it was now partially credited to Nobu. So there's a chance that the collected amount due from Wilson is considered as lapping because the collection of the amount due from Wilson is delayed and there was no entry on December 26. Instead, the collected amount due from Nobu worth 45,000 was first credited to Wilson's account and then only partially credited to Nobu. Let's keep inspecting the journal entries. On December 30, we recorded the sales transaction with Stick. So this further proves that there may be lapping, right? Because if you go back to our correct transactions, it should be that the whole transaction for Stick should be collected as cash already. There's no need for an AR there. And why is it that on December 30, there's a debit to accounts receivable for 20,000, but then on December 31, there was a collection amount for Stick worth 40,000. If we inspect what really happened on December 31, in fact, a few days before, there's a bank transfer, right? From BDO to Metrobank or the other way around. So this may be an erroneous entry because a transfer between one bank account to another bank account does not really affect our cash in bank balance, right? So this may be an erroneous entry that was recorded in journal entries even though there should be no journal entry. If you remember, on December 27, the first bank transfer was not recorded correctly, right? So there was no record there because the total cash in bank balance is correct. Lastly, on December 31, oh, take a look at this. We recorded a sales transaction to Karen even though we already discussed a while ago that the sales belonging to Karen should not be recorded in this year. The collection or the cash sales transaction for Karen should be recorded on January 2. Therefore, it's as if we are not closing our books. We are letting sales transaction to be recorded even though it's for the next period. This is a possibility wherein there can be what we call a window dressing because a next period sale was recorded in the current period. Now that we inspected the journal entries, so there's a chance for lapping, there's a chance in Wilson's accounts receivable, there's a chance of erroneous entry for the bank transfer, and also window dressing, right? Because we recorded Karen's account or Karen's deposit, which is supposed to be on January 2, but we recorded it as part of December. Now let's inspect the bank accounts of our Metrobank as well as BDO bank statement. So let's just assume that the bank balance or the bank statements is only for the last few days of December. So when we inspect our bank statement, we cannot see the proof that Wilson's AR is indeed collected. So this means that indeed there was lapping that happened, that it was not recorded on December 26, and the next collection from our next customer is credited as if we collected from Wilson. But in our bank statement, there was no money that went in, reflecting or amounting to the 20,000 due from Wilson. There's indeed a bank transfer that happened. And by the way, the journal entry or the actual dates that indicates what happened may be different from our bank statements because it takes time to clear checks, even though it's deposit or withdrawals. So that's normal as long as it's reflected within the bank statements. And just like the bank transfer, right? We withdrew on December 28 and there was a receipt on December 29. So it tallies our bank transfer transaction. The next transaction is referring to the collection from Nobu as well as the collection from Stick. The collection from Nobu was deposited to Metrobank while the collection from Stick was deposited in our BDO bank statement. So that's properly accounted for. However, the last withdrawal of 40,000 was not recorded against BDO, but a deposit is deposited or recorded in our Metrobank. So this means that this bank transfer that was not recorded as a withdrawal, but recorded as a receipt on another bank account is a red flag or a possibility that there may be kiting. Take note that there are no conclusions here until there are further evidence that is gathered. It's external evidence that is gathered to prove or to conclude whether such errors are due to fraud or misstatements. But it is a possibility indeed that there is kiting. And of course, let's not forget the window dressing, Karen, a while ago, because again, for window dressing, we accepted or we recorded a next period sales as if it's part of our current period. And that concludes our discussion for internal controls of cash as well as different ways to conceal cash shortages against cash. As future accountants, may we ensure that our cash is safe by knowing and understanding their inherent risk, establishing internal controls, and of course, detecting where misstatements or fraud may happen. See you in the next video. Bye!